Organization for Economic Cooperation and Development has cut its global growth forecast thanks largely to the trade war between the United States and China. The OECD says the global economy will see its weakest growth since the financial crisis this year, just 2.9%. That's down from 3.6% last year. The forecast comes as deputy trade negotiators from the U.S. and China are meeting face-to-face for the first time in almost 2 months. High-level talks scheduled for early October are part of the discussion. We're joined by today's panel, Yahoo Finance editor-in-chief Andy Serwer and Kevin Mahn, Hennion and Walsh Asset Management President, Chief Investment Officer. Kevin, let me start with you. We keep being told don't expect a deal this year, and yet they're pushing aggressively from the administration to get China to buy more ag products. So I guess my question would be, why should we not expect a deal?
I don't think it's a question whether or not we get a deal. I think it's a question of whether or not there's additional tariffs imposed. That has the real negative impact on global GDP, more so in China than in the U.S. So the fact that they are speaking again is constructive. Perhaps that delays any additional tariffs beyond the all-important holiday shopping season and into 2020. So whether or not we ultimately get a trade agreement this year, which I don't think we will, and we get it next year, and even if that trade agreement doesn't put us in any better position than we were before all this started, I think that's a net positive for the markets because it just removes that uncertainty.
At the same time, how concerned should people be about that OECD forecast cut, right? That they're expecting growth to be, pretty significantly slower than the prior forecast.
The two leaders of the largest economy in the world are playing with fire here, right? And not only for their own economies, but for the world, as you say, Julie. And, it's interesting to me, we've seen a de-escalation, right, over the past couple weeks. And now, can that continue to some sort of situation where it's resolved? I agree with Kevin. And of course, hanging over all of this is politics. How much does politics really influence where things are going? For instance, the emphasis on these talks is on ag products. Well, the president has a real strong interest in making sure that he has support in the farming community as we go forward, right? And, Wisconsin is the critical state. So, those things come into play.
He's already got the support of the farmers, even with where we are right now, the loss of the market for soybean farmers. I mean, there's been damage,
well,
but he still
has.
We don't really know. There's only one proof. It'll be November of next year.
Right, but let's assume if the polls are accurate, it doesn't prevent the global slowdown if all the Chinese do is buy our ag products, does it?
No, it doesn't. I mean, and there's so many other things to resolve. I think ag is easy, quite frankly. I mean, the harder thing is going to be the IP.
IP is
right, the intellectual property. And
if you could almost separate trade from IP, I think we're on a much clearer path to resolution.
But where I'm going with that point about the farmers is we're seeing growth slow down. If all we get is a status quo now until next year and we'll buy some more ag products, that growth that the OECD is talking about doesn't get any better, and we continue to hurt. What is it, 300,000 jobs have been lost since the trade war started?
I think that's the theme for the entire macro environment right now, slowing but growing, whether it's within the U.S. or it's abroad. Our economy is slowing, but it's still relatively stable. And if we get some positive advancements on trade between the U.S. and China, if in fact we now have somewhat of a clear blueprint from the Federal Reserve that they're likely to do nothing for the balance of this year and next year, and the U.S. consumer remains strong, well, if a rising tide lifts all ship, the U.S. economy doing well, that should help other countries. And if there isn't the imposition of additional tariffs, that's not going to serve as an anchor to that global economic growth.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.